Digant Haria joins us, co-founder with GreenEdge Wealth. Let's connect with him to talk about finance, microfinance, insurance, Paytm. Lots happening in that entire financial space. So you've already dressed in Diwali attire? Celebrations have started early?
Yes, it's between Dashera and Diwali that Ramji made the journey from Sri Lanka or Lanka to Ayodhya. So these days we celebrate. At least the victory has already been made. Diwali is not there in the financial sector. The one which we are going to speak for, but there's Diwali somewhere else. So.
But for financials, it's not bad. I mean, you keep banks aside. Financial inclusion themes like a brokerage or AMCs, or for that matter, even a stock like NSC, BSC, they've done rather well. So this financial inclusion theme minus banks has done rather well.
Absolutely. I think the lending space is the one where there is some bit of problem. I won't say some, decent bit of problem, but yeah, the non-lending space is doing quite okay. And in the lending space also, there are some pockets which are doing well. But in general, when the top 8 banks don't do well, it's just that, the sector has a softer undertone. And, now you have the entire long tail of the microfinance companies, the personal loan companies. A lot of them are starting to enter the pain cycle. So the traditional financials, as we know, are under pain. But you're right that the AMCs, the brokerages, some part of the insurance pack, these things have done very well. And yeah, very little to complain, Nikunj, between last Diwali and this Diwali. So
now banks were supposed.
Which is why
Okay, banks were
Sorry,
supposed to make a comeback. Banks were supposed to make a comeback, and just when it was looking good for them, the economy has started slowing down. NPAs have started coming up in bits and pieces. So do you think this entire template of banks make a comeback and will lead the market rally now gets delayed indefinitely?
Yeah, Nikunj, you're right that let's see the deposit problem. Everybody thought that once the US Fed starts cutting the interest rates, the liquidity around the globe will be easy, and that will give some headroom to RBI also to cut the deposit rates. That was supposed to be the largest problem that we had, which is the tight deposits and declining growth, and declining NIMs to some extent. But that really seems to be, the what will happen probably in 25. This year it's not going to happen, and which is why, yes, the sector is getting narrower and narrower. In the large banks, the only one doing well is HDFC. And see, it's like a negative race. Why is HDFC doing well? Not that it gave any great set of numbers or any great, it's just that their asset quality performance was a little better than everyone else, and that is why HDFC is doing well. So it's, people will flock. Those who have to invest in banks have to flock to HDFC, no other choice. And even in microfinance and all, you see a lot of pain building up. So I think banks parties definitely probably in 25, that too, we can debate whether it happens in 25 or not, but definitely not happening right.
Right. Digant, hi, morning. Firstly, I want to talk about the insurance space right now, and especially in the backdrop of the reports which are doing the rounds that the government is mulling an exemption for health insurance products with coverage of up to 5 lakh rupees. What does it mean for the insurance sector?
See, it's a noble gesture that the government is doing, but let me give you some statistics that health insurance in India is actually a rich man's or an affluent man's product. It is just 5%, less than 5% penetration is what health insurance have, and it is only the aware people who really go ahead and buy insurance. And I think a lot of them do end up buying 10 lakh, 15 lakh, 20 lakh cover, because we all know what hospitalization expenses have increased over the last 10 years. So I think this is just some bit of icing on the cake in some way. You've not expanded the cake very meaningfully by reducing GST just on ticket size or coverage amount less than 5 lakhs. So I think it will not be a game changer. What this sector really needs is one good year. It has been suffering for the last 2 years. Either COVID related hospitalization, the discretionary hospitalization, and these companies have been bleeding. I think next 1 year can be really good just because of that cyclical recovery. And I don't think what the government has done really changes the game for the sector. Government should have done more, maybe 10 lakhs and more. That would have really helped. But 5 lakhs, I think, is a half-hearted measure.
Okay. In general, the sector, which is the insurance sector, has not seen growth great. The template was that post-COVID, Indians will have a better realization of the value of their life, whether it is life or whether it is health. COVID was an outlier. They had to pay extraordinary claims and things were supposed to settle out or even out in FY24 and FY25. But that is not happening. Even though the sector is growing, there is still cutthroat competition. Distribution channels are getting retested, and profitability is still a distance away. Why is that?
I think, see, it was a dilemma. Like before COVID, we used to think this is, 15% growth is given in this sector. Nobody can take that 15% CAGR away from this sector. But as I said that, insurance has probably penetrated, the affluent class of India. And now if it has to go down, the products have to be really more innovative. They have to be priced in a slightly different way. And that will require a little bit of regulatory flexibility. I think, see, the entire health insurance sector, Nikunj, is hardly doing profit of 2,000 crores. It's peanuts, when you compare to how much of health insurance India really needs over the next 15, 20 years. 2,000 crores is nothing. Even if one NBFC does more than that in terms of annual profit. So I think health insurance sector, government regulator, everybody will really need to come and lighten up the rules and ensure that this sector really grows, because it is in everyone's interest. But right now we are not seeing any of those things. So which is why, be it Star Health or Religare, we were positive on these, but I think it's going to be a slow journey. No magic pill is going to revive the growth, unless the government and the regulator comes in.
So complete avoid, and if you hold it, a sell. I guess that's the verdict for insurance.
Not really. See, it's just that, things won't happen fast. And see, in India, we've always seen, Aisha, that, for a few years, growth does not come. And then suddenly the growth bounces back. So I think we have seen 2 bad years for health insurance already. So I would like to believe that the next year will be better. And that would be better even if there is no respite from government or the IRDA. So it's definitely not a sell, but not among our top picks. Maybe it will come somewhere in the mid-tier kind of picks, not in the top.
What are your top picks within financials? I'm keeping it open in terms of insurance, healthcare, distribution, everything, NBFCs.
Yeah. So Nikunj, I think just before my interview, there was this discussion on gold and silver. I think gold and silver both are, they are in an uptrend of its own, and that's happening after a long time. A lot to do with the de-dollarization trade that's happening across the world. So, these gold loan companies really benefit out of a good gold price. So Muthoot Finance is, amongst our, only pick in the lending financial space because that benefits. There were other gold loan companies, but, some of them have run into RBI related problems. Some of them have been, scolded by RBI for their microfinance problems and so on. So I think lending financials is a very narrow space right now. Outside of lending financials, we feel that capital market plays still have a long runway to go. Of course, the angel broking and the AMCs of the world have rallied a lot. So I don't think there is a lot of a multi-bagger kind of return should be expected here. But there are companies like JM Financial which are just turning around, shutting down their lending businesses and trying to focus more on the fee-based investment banking kind of business. So I think that is where we see some real good action which can happen over the next 12, 18 months. So yeah, one pick in the balance sheet financial, one in the non-balance sheet financial. I think these spaces should do well. And someone like Religare, it's a special situation. The Care Health is housed inside Religare. So that has a lot of value. Not that value is going to get unlocked very fast. There's a corporate battle going on between 2 groups. Whenever that battle settles, I think Religare also offers a lot of value.
So if you are bullish on NBFCs, if I may just throw in one more angle, one more dimension based on RBI's last credit policy, which is that NBFCs are growing at a rate which is higher than the industry average. They are taking risk or high risk by ignoring the basic facts about the borrower, and government and RBI is not comfortable with the kind of borrowing they have, which is largely dependent on banks. Could that be a spanner in the works, which is that the regulatory tailwind now could become a headwind for NBFCs?
I think because that has always been the cycle. Like in microfinance, see, microfinance as a sector has survived or thrived because of government allowing, the PSL benefit. So they get as much funds from the bank as they want. And it is in government's interest to ensure that, the rural borrower or the poor people get as much loans as they can. But I think we have overdone that in the last 2-3 years. We have really overdone that. The rural incomes are growing at 4%, but the loans outstanding on these rural borrowers are growing at 22%. This is definitely not a sustainable situation. And we have reached a point where RBI is saying, boss, you really need to slow down. Otherwise, we'll be in big soup later on. So RBI is taking precautionary steps. I think this entire unsecured lending space, the personal loans, microfinance loans, this is where most of the pain is. Secured lending space still remains good. I think there is still a lot of upside in the secured lending space. And when I say secured lending space, it is gold loans, commercial vehicle loans, and housing finance. These are the three spaces which are relatively insulated. I think growth will be there. Amongst these three, we like gold finance the most. And amongst personal loans and microfinance, I think we have to wait. December should be the worst quarter. That will be like when hell breaks loose kind of a quarter. And after that, maybe, we can start picking up the good business models because, microfinance, personal loans, it's the need of the country, need of the people. But we have to wait. And, we have to wait for December when, the worst comes out from the sector.
Digant, great to have you on the show and wish you happy Diwali in advance from all of us.
Happy Diwali to all of you guys. Thank you.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.